Hey everybody, it's Norris with the Norris Group. It is Friday, October 19th, and when it comes to neighbors, what is your biggest concern when you're trying to sell real estate? What makes a great neighbor? What makes a bad neighbor? That and much more as we cover the biggest headlines in real estate. You don't want to miss a radio show and podcast this week. I am back from a little bit of vacation, and we are airing I Survive Real Estate. It's part 3, so you're going to get a little bit of Doug Duncan and John Burns from John Burns Real Estate and Consulting talking about the economy and everything going on with that. And then you get me talking with Dot Loop, Sean O'Toole from Property Radar, and Eddie with Affinity Worldwide talking a little bit about technology this week. So don't miss that on the radio show and podcast. CoreLogic released their latest HPI forecast validation report comparing its 12-month CoreLogic HPI forecast to the actual CoreLogic HPI index, coming in at only 1% difference at 5.3 as opposed to 6.3. Their prediction was 6.3. NAHB and Wells Fargo reported a 1-point increase in builder confidence this month, putting it now at 68. The latest mortgage application survey from the MBA showed mortgage applications decreased 7.1% from the last week, and mortgage rates decreased only slightly after we saw several increases over the last several weeks. 30-year rates now at 4.85% and 15-year rates at 4.26. In a recent poll by ImproveNet, it surveyed 2,500 people living in 24 cities to determine the most annoying city to live in, as well as the top annoyances in those cities. The top 3 annoying cities: Dallas, Miami, and Austin. And hey, don't worry, California made the list. Los Angeles, San Francisco, and San Diego came in at 5, 7, and 10 respectively. Least annoying, you've got Minneapolis, Portland, and Atlanta. So what are things that people find annoying about neighbors? Well, it's loud. There's a lot of loud mentioned, but specifically loud music, loud voices, parties, parking issues, and loud pets. And there's more loud in there, so you have to check out the entire list. Check out the blog to links to all these stories. A new Zillow analysis finds that higher rates are responsible for about 2/3 of the increase in buyers' monthly mortgage payments compared to with what they were about a year ago. Monthly mortgage payments are 15.4% higher than they were back in August of 2017. The median home value is only 6.5% higher over the last year. So for some buying the median U.S. home, their payments are $118 higher, or $1,416 more each year. According to a Bloomberg opinion piece, the housing market is raising some serious red flags, and that real home price growth looks to have already entered a cycle downturn that is likely to intensify as affordability worsens. There's a lot of opinions all over the market. I Survive Real Estate specifically talks about this very topic. But in this opinion piece, the National Association of Realtors Housing Affordability Index recently dropped to a 10-year low, partly as a consequence of rising mortgage rates. Affordability has also been undercut by steady rise of prices along with those mortgage rates, and let's be honest, earnings just have not kept up with those increases. Sure, there's demand for homes, but prices are increasingly out of reach for a lot of different kinds of buyers, resulting in a decline in the number of homes sold. So this helps explain why, according to the University of Michigan's monthly consumer sentiment survey, home buyer attitudes recently fell to the worst reading since the end of 2008. And that's just really hard to believe for me, because there's still a lot of areas that are very affordable. A downturn in growth of home prices is unwelcome news for home builders, as growth in total homes sold have actually turned lower and is back in negative territory. Residential building cost growth has ramped up to one of the highest readings on record. Home builders' profitability is caught between falling home price inflation and rising building cost inflation. You throw in that the mix of the Fed hike, and then also the tariffs that are going on, specifically the steel tariffs, and you've got a recipe for not some fun, so we're definitely going to have to watch on that. The stagnant housing market has been great for the remodeling industry for homeowners that plan to stay in place, adding square footage, upgrading their home, and retrofitting their digs to age in place. According to a report from the Joint Center for Housing Studies at Harvard, they expect the pace of renovations to start declining this year. The leading indicator of remodeling activity was at a 10-year high at 7.7% this year, although remodeling expenditures are expected to slow down just to 6.6%, so it's still really strong. The good news is growth is still a healthy pace and represents $350 billion in spending. So Lowe's and Home Depot stocks should be good. Now for the picture, if you follow us on Instagram, I posted a picture of this. This is a tulip vase. I was recently in London, and we were taking a tour through a Duke's home, and I kept seeing these pots, and I'm like, what is that? I had a feeling I knew what it was. Well, back in the day when tulips were worth a heck of a lot of money, when you were really fancy, this is this showed off exactly how fancy and wealthy you really were. That's a little bit obnoxious, I think. So we told you about the annoying cities part, but let's talk about good neighbors. The Good Neighbor Report found that 3/4 of Americans say that they have a good neighbor, but only 14% said friendship was a necessary quality in that mix. Being trustworthy, quiet, and friendly were considered to be the top 3 good neighbor features by 59%, 50%, and 46%, respectively, here in America. 18 to 34-year-olds reported the highest levels of not knowing if they have a good neighbor or not at 21%, so millennials may not feel like they are part of a community. Maybe they're just really busy, or maybe they're just really rude. I don't know. I'm always picking on the millennials. I'm just kidding. What is the #1 problem when you're trying to sell a home that you're most worried about when it comes to neighbors? Mine is always having a squatter neighbor next door, really bad, loud dogs that seem violent. Those are probably my top 2. I'd love to hear what you have to say. If you're on YouTube, please leave a comment below, and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video, and if we miss something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. So we only have a few more events coming up, and we are almost sold out on one of them. October 25th next week we'll be at the $1 Million Trade Show put on by the Apartment Owners Association. The 27th we'll be doing the Cutting Edge Financial Tactics Brunch in Costa Mesa, California. It was so well received last year we decided to do it again. However, you will find last year's on Amazon Prime, and you're going to want to watch it if you plan to attend this year, because we're not going with the basic stuff this year. The very first part of the event, each speaker is going to cover trends, rules and regs updates for this year and next year, so things that have changed, and the top 5 questions they're getting from real estate investors right now. The second half of the event is where you've got all these panelists on stage talking about different advanced topics like reverse 1031 exchanges, leverages, 1031 exchanges in IRA, leverages in IRA, entity issues that you may run up against, and the Trump tax law and how it applies to so many different things that we've got going on. So if you ever got tired of talking to an attorney and the attorney tells you to talk to a CPA, CPA tells you to talk to the attorney, they're all there on stage beating up questions. We already are very close to selling out, so if you want to attend live, you better sign up by this weekend. November 10th, we'll be doing the Intelligent Investor Real Estate Conference in 2018 in California, in Costa Mesa area, the Orange County area. I will be a part of a panel there, and we'd love to see you there as well. Please save the date. January 26th will be a new timing report that we will start sending out more information about soon. And I Survive Real Estate video should be released next week. We're just going to push it out when it's available on all platforms, including Amazon Prime. For more information on hard money, including fix and flip, buy and hold, and new construction in Florida and California, you can check out thenorrisgroup.com, and you'll also find more information about note investing there passively with trust deeds and mortgages. With that, have a fantastic weekend, and we'll see you next week.